Hi, my dear friends. How are you doing? Okay, guys. Today we will start a very important chapter. Charitable and religious trust. 100% 8 to 12 marks in the exam. Undoubtedly. Extremely important topic. As I told you, undoubtedly they'll ask in the exam 8 to 12 marks. Regularly asked in the exam, guys. So it will take some time, but then we will be doing it properly as usual. So come to page number R1, taxation of charitable and religious trusts and institutions. Religious trusts and institutions. So in the previous session, we finished off ESOP and all that done. This liquidation, buyback, all that we had done. Bonus stripping we had done before only. So this chapter is also over. Other sources also, we finished everything, guys. There's nothing much in that. Cool. So R1, taxation of charitable religious trusts. So let us move on. So first of all, guys, generally, section and 11 and 12 is a section where, the exemption is given for charitable and religious trusts, where the gross receipts will be deemed to be the income of the particular religious and charitable trust. Donation is very much part of gross assets. As basics I'm telling, then we'll go into the section. Generally, gross receipts will be what? The income, whatever income it generates. A trust will have various properties. So whatever income it gets under those various properties, it can be a school, it can be a hospital, it can be any organization, religious organization. Tirupati Balaji Trust, correct? So yes, all the income that they get is definitely called gross receipts. Apart from that, any donation that it gets is also part of gross receipts. That will come part of it. But if I specifically donate to the corpus, corpus is a fund which is separate fund. It cannot be touched. It is always used for the, it cannot basically, trust cannot use it for day-to-day activities at all. It is set aside for a specific purpose. So any donation to the corpus, it is totally exempt. I cannot touch that. It cannot come under the tax ambit at all. So general rule, I'm just doing an overview. We haven't even gone into the sections. Excuse me. If the gross receipts are say 1000 lakh, there is a 15% ad hoc deduction, 150 lakh. So the remaining 850 lakh will be taxable. However, that also can be applied. So full 850 lakh also will be exempt. 850 also will be exempt. 850 represents 85%. That also will be exempt. It is purely based on application. It's purely based on application. So these are the basics. So let's see with these basics, let us see the section. So we have spent a lot of time in designing this material. It becomes easy for you. Now, I have made a video whether BCCI will it come under charitable purpose. So immediately after this video, it's already that BCCI video is already there on my, YouTube channel, but nevertheless, for your interest, the next video I will put that video, whether BCCI should pay tax. It's an interesting video. If your exam is closer, do not watch that video. But if your exam is sometime later, 4-5 months later, if you have the time, watch that video. I've given you an insight on the definition, which is of charitable purpose, etc. Extremely in-depth we have analyzed, guys. Yes, so charitable purpose means what? Includes relief of the poor, education, yoga. Baba Ramdev Ashram, medical relief, preservation of environment. Sir, I'm sleeping every day, sir. I'm doing Shavasana. Will it be covered? Hey, yes. There is one sleep well mattress or something and some Restolex or something. So they're paying money for sleeping. I'm not joking. Imagine. They are called sleep consultants. You have to go there and sleep and then tell how was your level of sleep, degree of sleep. You're getting paid. Sir, charitable purpose, yoga, Shavasana, all that don't tell. Okay. Yes, yoga, medical relief, preservation of environment, including watersheds, forest, wildlife, etc. and all these things. More in depth, I've analyzed it in, what do you say, the BCCI video, you can check it. Anyway, the gist of the story is here, guys. What do you mean by that here? This is enough. This much you study, enough, guys. Relief for the poor, education, yoga, medical relief, preservation of environment, including watershed, forest and wildlife, preservation of monuments or places of objects or artistic or historic interest. Hampi is a World Heritage Site, so there obviously people are deployed for preservation of Hampi. So that obviously would be charitable purpose. If any trust is looking after the entire upkeep and preservation, it will be charitable purpose. Advancement of any other object of general public utility. So this, to understand more in depth, watch the BCCI video. Right? It is a good video. It will give you a lot of insight on how to read the Bear Act. Right. So what do you mean by advancement of general public utility? In the gist of it, advancement of any other public utility shall not be for charitable purpose if it involves carrying on any activity in the nature of trade, commerce, business for a fee or any consideration irrespective of the use or application of the income from such activity. So if it relates to any business, etc. See, if if a trust already does charity, like for example a school or a yoga center, Isha Foundation for example. But apart from that, they also sell, right? Isha honey, they'll sell this Isha balm. I actually use it. It's pretty good. Isha balm. Then they have these other things, right? Your, many things that they sell. They have Isha dhoti, all these things. Now, those things, if it's business related, incidental to business, it's allowed because it's part of, many things. It's Isha yoga. So it comes under this charitable purpose. But purely if you are into commercialization, for example, BCCI. What charity is BCCI doing? I'm just saying, right? So if you see that case, it may not be included in advancement of general public utility, is what they're saying. So if you see, however, carrying on commercial activity shall still be regarded as charitable purpose if such commercial activity is undertaken in the course of advancement of any other object of general public utility. Like as I told you, general public utility means anything for the benefit of the public. Now the entire yoga session, if Sadhguru organizes for the benefit of everybody, that is called as, advancement of general public utility. So in the course of a free yoga, session organized, in that if he sells Isha balm, Isha honey, then it's okay, is what the law is saying. The aggregate receipts of such activity do not exceed 20% of the total receipts of the trust. So this we will see slightly later. Anyway, overall should be 20%. The aggregate receipts of from such activity, that is that selling of honey, etc., should be total receipts. If it's 100 crore, if it is less than 20 crore, then it's okay, is what they are trying to tell. Where the gross receipts of commercial activity is in relation to 1 to 4 above exceed 20%, it shall still be regarded. So this is talking about 1 to 5 here. This is different. The only problem is 7. BCCI. I told you an example, 100 crore, Isha Foundation, Isha Yoga. Even if 40 crore come from business, it's okay because it's point number 3. The 20% route is only for advancement of any general public utility. So more on that, you can check the BCCI video next. You will understand that in a much better way because only on this section I have analyzed that. That is only if you are interested. If you don't watch that video, nothing will happen. But if you watch that video, something will happen. Okay? Yes. Income from property held for charitable or religious, but this is what is the important part now. Let's go ahead. Subject to provision of 6063, the following income shall not be included in the total income. Income derived from property held under trust wholly for charitable or religious purposes. To the extent to which such income is applied to such purposes in India. So here they are saying Isha Foundation has many properties in India. Sri Sri Ravi Shankar's Art of Living Ashram has many properties in India. And from all the properties that they hold, whatever income that they get wholly and exclusively for what? Charitable or religious purposes. To the extent of such income, if it is applied in India, it is, they are saying that yes, it will be exempt. It will not be included in the total income. So one question will arise, what about outside India? Art of Living has so many centers outside India. Isha Foundation has so many centers outside India. What about that? So to to obviously cover those things also, section 12 came. Because here guys, they spoke about income derived from property. Income derived from property. But what about, other things? What about abroad? What about abroad? Income derived is one part of it. What about abroad? What will that happen? So when will that be covered? How will that be covered? That is why, as I told you, section number 12 came into the picture. Check. Section 12. Any voluntary contribution means donation received by a trust created wholly of a charitable purpose by an institution established wholly for such purposes, not being a contribution made with a specific direction that they shall form the corpus. See, not being contributions made with a specific direction that they shall form part of the corpus, because corpus is completely separate. If there is a direction that this money will go to the corpus, that will be outside the purview of section 11. So non-corpus funds, if I am receiving, shall be for the purpose of section 11, deemed to be the income derived from property under trust duty. So they are telling what? Even though you are getting any voluntary contribution, any donation, or you are giving any value of any services, this is educational services, this medical or educational service, this is the main crux guys. All hospitals, all educational institutions are running under trust. It is a, more often than not, it is a front to convert black to white. My first audit was in an educational institution which was run by 5 real estate companies, all big shot real estate companies. This only was happening there. Obviously, I cannot name it. Yes. So the value of any services being medical or educational services made available by any charitable or religious trust running a hospital or medical institution, that also will come. Apart from that, any voluntary contribution received by a trust, any donation, anywhere you receive, any contribution you receive, even from outside India, it is deemed to be income derived from property held under trust. That's all. So there is a link between 11.1 and 12. 11.1 and 12. Coming to 11.1. Income derived from property held under trust wholly for charitable or religious purposes, to the extent to which such income is applied to such purposes in India. To the extent to which such income is applied to the purposes in India. And where applied means what is the question? What do you mean by applied? Correct? What do you mean by applied? So they are saying applied means what? If I give employee salary, is it applied? If I buy a building, is it applied? If I buy a car for the benefit of the, the trust, is it applied? Can I claim depreciation also? Plus, can I buy the car also to double deduction? What do you think? So we'll see all those things. If any liability is incurred but it is not paid. Liability is incurred but not paid. Right? I've incurred a liability. I have bought some things worth 1 crore. I have not paid yet. It's lying in payable. Is it applied? Have they told applied or paid? Yes, guys. So employee salary is covered, building covered, car covered. Now depreciation, can you claim or not? This we'll see later. Liability incurred but not paid is also deemed to be applied. What about, can one charitable institution give a donation to another trust which is registered under both 112A, 12AB, now it's called 12AB, earlier, now it's called 12A, earlier it was 12AB, or 1023C. You can register under two sections. If I receive money, like for example, I told you this one, this 850 lakhs, if it is applied, then to the extent of application, it is exempt. If I apply to employee salary, is it covered? Yes. Buying a building? Yes. Buying a car? Yes. Can I claim depreciation also, car also? We'll see that later. If I have incurred a liability, out of these 850, 250 crores I've set aside incurred liability for construction of a school. Is it deemed to be applied? Yes. After everything, some 400 lakhs is left, 4 crores. I am donating it to one more charitable trust or religious trust registered under 12AA, 12BB, sorry, 12A or 12AB and 1023C. Is it also application? Yes. Yes. So, what exactly is application? All these things. Will be application. What I donate to a trust which is not registered under 12A, obviously it is not application. Depreciation, we will see that. Right. So here I told you, even if you incur a liability, if you don't pay also, that is application. Think about it, what all can happen, guys. I will incur an expenditure coolly and tell I'll pay later. But just because of incurrence, I used to claim as an application. Many people started doing this golmaal. So Nirmala auntie, what did she do? Like, no, this is too much. We will change it. Okay, let's see. So everything remains the same except this. Because they were doing it earlier, it was allowed. Earlier it was allowed. Now we'll see. Right? Check it out. The following, this notes is very nice. Just stick to it, guys. Okay. The following income shall not be included in the total income of the religious or charitable trust. First one, 15% of the income derived from property held under trust, wholly or charitable. This is like an ad hoc deduction. Deemed application. I don't have to actually apply. Deemed. 85% of the income derived from property held under trust to the extent to which income is applied for religious or charitable purposes in India. What do you mean by applied? In India. Outside India also? Yes. Covered in 12. Any voluntary contribution. Income in the form of voluntary contribution made with a specific direction that they shall form part of the corpus of the trust, subject to the condition that such voluntary contributions are invested as per specific modes under 11.5. We will see this. We will see this. So guys, this 85%, no? This 85%, it's an option. So please listen carefully. It is 85% can be applied as per the explanation to 11.1. I'll show you the section here. This one. Explanation 1. Especially in that second one. 2.1.1, 2.1 and 2.2. 2.1 and 2.2. Explanation to which section? Section number 11. So please listen to me carefully. I can apply this 85%. I can apply this 85% under explanation to section number 11.1. In that clause A, clause B. Here. Two one two two. Okay, let me make it 2.1, 2.2. It will become easier. Because it is for the purpose of clause A, clause B only. Yeah, 2.1, 2.2. You can apply it using this. It's a little complicated, irritating procedure. You have to apply this year only. Next year you cannot. What? We'll see that. Or either you can do this, guys, or what can you do? You can simply say mother promise, God promise, auntie promise, uncle promise. What will I do? I will definitely apply this in the next 5 years. So that 150 lakhs, uske baad 850 lakhs I need not apply only. I can just say I do mother promise, father promise, auntie promise, uncle promise, Nirmala auntie promise, I will apply. So guys, one is actually apply. Other option is what? Promise to apply. Under which section? 11 subsection 2. This is complicated. This is easy. The procedure of investment is given in 11 subsection 5. What do you think 100% of the trusts in India, 100%, whatever I have seen, everybody, and whatever everybody else has seen, everybody, what will 100% of the trust follow? Complicated one or easy one? In this, first of all, you need to apply. If you don't apply, it will be disallowed, added to income. All that nonsense is there. Here, 850 is there. I promise to apply. When? In the next 5 years. Imagine. Plus one grace here is also given. Later we'll see. If I don't apply within that time, then you can add back. But until then, I can apply. Whenever I want, I can apply. This year you cannot come and tell. Next year I'll apply. Bro, I already told you, no? So guys, obviously everybody will follow this. Nobody follows this. In the exam also, they will not ask. But is it in the syllabus? Yes, we have to do it. We are not skipping. We are doing it. But I hope you understood. 85, so the same thing is there. 15%, 85%. In that option 1, useless. Practically not feasible. This is option 2. Here you see. Such voluntary contributions are invested as per specific modes under 11.5. This is that option. And I told you in India, outside India is given here. This is section 12. Voluntary contribution. Guys, here no direction that they shall not form part of corpus. Obviously, that is not even there. Shall not form part of corpus. Obviously, because I told you corpus is not even considered in section 11. So whatever that language there is part of this only. Shall for the purpose of section 9 be deemed to be income, and it will be, followed accordingly. You see 11, 12, 11, 2. So many sections are there. Anyway. Percentage shall be calculated on gross receipts, obviously. Guys, I had paused it to go have coffee. I came back and I'm teaching. Then I saw bloody it's not unpaused. I started teaching already. What I told was, I'm again unpausing and I'm teaching now. What I told was that change you made, no, not delete that change. Delete that change. So it's correct only. Whatever is given here, it's correct. Why? I connected one more section and added it here. It will confuse you. Leave it. Okay. So I'll explain. In section 11, three things are not covered. One is that 15% ad hoc. Second, 85% if it is applied. Third one, any corpus donation will not be counted for the purpose at all. So everything is given in section 11 only. Check this. You see section 11. Any income derived from property in India held under trust outside India, I already told you. And you see, income in the form of voluntary contribution made with a specific direction it shall form of the corpus, subject to the condition that they are invested under 11.5. Correct? I made it not here for a reason. You leave it. I'll tell you later. Simply it will get confused. Confusion will get created. So basically, gross receipts if it's 100 to be counted. Voluntary donation 20 to be counted. Voluntary donation specifically saying that they are inserting into the corpus 10, that is not to be counted. This is not part of income. In this also, let us say it is 120. In that 15% ad hoc not to be counted. Remaining 85% also not to be counted if it is applied. This is what I was teaching. Then I realized, oh, I have still not unpaused it. Okay, that's all. I started writing already. This 85%, how will you, what do you say, how will you apply? Two ways to apply. One is the longer route, complicated route. One is the chilled out route. So what will everybody follow? Chilled out route. What is a chilled out route? Chilled out route is 11.2. Read with 11.5. 11.2. Chilled out. 11.2. 11 also, 2 also. See, easy to remember. 11, this looks like 11. Then this looks like 2. Correct? Chilled out route. All charitable fellows use the chilled out route. Got it? 11.2. Read with in what way? 11.5. Given in 11.5. Right. Percentage shall be calculated on gross receipt basis. And guys, this 15%, no, there's no need to set aside as such. It is directly ad hoc. Whether you use it or not, it is given. Application of income means expenditure is allowed only on payment basis. Incurrence of a liability for an expenditure would not amount to application of income. Major change by Nirmala aunty. Right? Finance Act 22. This is irrespective of the method of accounting employed. However, during any previous year, if any expense was claimed on accrual basis, shall not be considered as applied on payment basis in any subsequent year. For example, the trust follows accrual system, made a purchase of 1 lakh in March 23, for which payment was made in May 23. 1 lakh shall be applied in previous year 23-24 and not in previous year 22-23. You cannot claim any accruals because lot of scams were happening. This is the new change as per Finance Act 22. Okay. Yes. So if you see, the words applied will include what? Can be purchase of capital assets, any revenue, expenditure, salary, donation to religious charitable trust, already discussed here. That's why I gave you a gist of everything, so it becomes easy. All this discussed already. I only have to discuss with the depreciation that you can take again. That we will see. But we shall see. Note number 4. Note number 4 is explanation 4.2. What people used to do, guys? Coolly they used to take a loan, claim the interest on loan also. Loan of 40 lakh they used to take, claim interest as a reduction. This 40 lakh they used to apply in the charitable purpose, buy an asset, claim depreciation on the asset also superbly. Then on this also 40 lakh because they are applying the loan. It was deemed to be application. Deadly. When they brought in 40 lakhs, they took it as gross receipts and that was used to buy an asset. That was taken as application. Then this 40 lakhs asset, they used to claim depreciation. Plus that interest, whatever they are paying on the loan, they used to take. They said nothing doing. Explanation 4.2 of section 11.1 was inserted where they said application for charitable or religious purposes. I still haven't discussed whether depreciation on car or on any asset can be taken. That I'm not yet discussing now. We'll come to that. This I'm only talking about loan. Can I take a loan and claim it as application? Application for charitable or religious purposes from any loan or borrowing shall not be treated as application of income. However, it shall be treated as application in the previous year in which the loan or borrowing is repaid from the income of that year. Example, if a loan was borrowed by the trust in previous year 22-23 of 40 lakhs which was used for construction of a building for charitable purposes, earlier they used to take it as application, now it is not done so. But in that 40 lakh I am going to repay. I will repay 10 lakhs in 23-24, in 24-25 I will repay 30 lakhs. This year, yes. 10 lakhs can be treated as application in 23-24 and 30 lakhs in 24-25. Yes, next 11.6. If a trust treats expenditure on acquisition of asset as application of income, then the trust cannot claim depreciation on the value of such assets and such depreciation cannot be considered as application of income. Very, very simple. Corpus donations made by a trust with specific direction that they are towards the corpus shall not be treated as application of income at all. It will not be covered in that level only. If such corpus donations are made to, what were they doing? So what used to happen was, I told you, corpus donations are outside the purview of section 11. So what used to happen, let's say, I have a trust with 1000 lakhs, 150 lakhs is that deduction, 850 lakhs is still there. Let's say around 200 lakhs I applied properly for expenses, etc. How many is left? 650 lakhs is left. This 650 lakhs was given as a corpus donation to a trust which is registered under 12AA. It's a corpus donation. It is a corpus donation. Do you think I should allow this? People were saying, if somebody donates here as a corpus, I will not take. But if somebody from that whatever money is there, from there if I donate to corpus of some other organization, it is deemed to be application. 100% wrong. So, Finance Act 2017, Arun Jaitley. said this corpus donation is not application of income. Are you understanding my point? If in this 1000 lakhs, let's say extra 100 lakhs is corpus donation, then this 100 lakhs is not counted. Leave it. But of the remaining 650 lakhs in this example, right? If I transfer that entire amount of 650 lakhs to a trust under 12AA, then is that application? Ideally, people were claiming it's application because me receiving corpus is not included, but me giving is included. Arun Jaitley said no. So people were doing one more golmaal. Same 650 lakhs, instead of giving to a trust under 12AA, they were giving to a trust under 1023C. Nirmala auntie in 2020 said, boss, this also is not application. I am not opening the Bare Act and showing you because it creates confusion. That's why I have made this notes very easy in the form of notes. Check it out. Note 1, note 2, note 3. Till note 5 we have cleared. Each of this is an examination adjustment. 8 to 12 marks, guys. That's why I am going slow. Coolly we are doing. Like this only you study. More than sufficient. Check this. Corpus donations made by a trust with a specific direction that towards the corpus shall not be treated as application if such corpus donations are made. Trust registered under 12A or 12AB, fund, university or medical institution under 1023C. This was inserted in by Arun Jaitley, this by NA. NA means Nirmala auntie. 2017, 2020. Got it? That's why here I did not write that word not. I had linked this and written. So you forget about this is correct. No need to make any change. It's correct. Okay. Little over action I did. I'll insert that. Let them connect. Normal only we don't know. Interconnections and all not needed now. Okay. Cool guys. Over action by me. Sorry. Here. Note 7. Income derived from property held under trust will include voluntary contribution except donations for corpus fund. Section 12 we have seen. Corpus donations will be exempt only if they are invested as per specified notes under 11.5. If not invested, then such corpus fund shall not be exempt and treated as normal donation. I told you corpus is set aside for a particular purpose. And what is that purpose? Until that purpose is met, it has to be invested. How it is to be invested? As per 11.5. What is 11.5? Just for your knowledge, quickly. It should be invested only in these things. So a corpus not invested in these things would be a normal donation. So if you call a corpus donation, it should be excluded from that initial money that you are getting in. If I want to subtract it, then yes. So basically, for example, if the gross receipts are 1000, voluntary contribution is 100, voluntary contribution towards corpus is 500. In the entire income, should I take 1600 or 1100 is the question. I will take it as 1100, then 15%, 85. I will do that. I will not consider this only and only if it has been invested under 11.5. If it is not invested in that, then full 1600. I will forget about the corpus word and I will do it normally. I will do it normally. Check it out. That's what it says. 7A. Is not invested as per 11.5, then such corpus shall not be exempt and treated as normal donation. Got it. B we'll see later. I told you, no, 85%, how will you apply? 85% should be applied as per that explanation I told you, no, that is given here, note number 8. Note number 8. Either you do as per note number 8 or you do as per 11 subsection 2. Right? So for your knowledge, in this notes, 85% should be done as per note number 8 or 11 subsection 2. Practically everybody follows this. This is a complicated procedure. But sir, is it in the syllabus 100%? Yes, let's do that. Note number 8. If in the previous, just follow these notes, guys, just follow blindly, more than sufficient, everything I have covered. So there is 100 lakh, 15% is 15 lakh subtraction. What I have applied is 22 lakh. To be applied is 63 lakh. Now assume in this 63 lakh, 58 lakh one is not received yet. I'm supposed to get, I'm following accrual system. It's not received only, what to do? They said I'll be getting it, but they did not get it, not received yet. What to do? That is why note number 8 comes into the picture. What if it's received next year? What if part is received next year? When will I claim? Assessing officer will say, sir, 63 full, on that you have to pay tax, sir, no exemption. That's why some relaxation is there. I need to file a document with the assessing officer before the due date of filing the return. Then he will say, okay, no problem. Let's see that. Check it out. If in the previous year, the income applied towards charitable or religious purposes in India falls short of 85% of the income derived during that from the property held under trust, for the reason that whole or any part of such income has not been received. In my example, 63 out of 85 not received during that year, and the SSE submits a declaration to the AO on or before the due date that such income shall be applied to such purpose in the year of receipt or in the immediately succeeding year. I'll say, sir, whenever I receive it, I will apply, sir. Or next year I'll apply, sir. So I will say, let's say this 63 in this example was in the year 2023, 58 not received. I will tell this fellow, sir, if it is received in 2024, that year only I will do, sir, or next year, pakka I will do, sir. If it is received in 2026, sir, 100% I will definitely apply that year, sir, or immediately next year I will do it, sir. I should write it and give. When should I write it? Before the due date, 31st September 23. 30th September. Sorry, 31st October, no trust, 31st October. Then such income shall be deemed to be applied during the previous year in which such income was derived. In which such income was derived. So if you make that promise that you will, do it, that year only it is Deemed to be applied, deadly. So basically, if the income is derived on 31/3/2023, but you actually promise that whenever you receive, let's say in 2024, or 25, whatever you do, then which year it is deemed to be derived? In the previous year in which the income was derived. If such sum was not applied as per the declaration furnished, you did not apply, the amount not so applied shall be deemed to be the income of the previous year immediately succeeding the previous year in which such income was derived. So the next year it will be deemed to be your income. See the example. In the previous year 22-23, 2 lakh was not received and a declaration was submitted to the AO that such income shall be applied for such purpose when it is received or in the immediately succeeding previous year. Then 2 lakh shall be deemed to be applied in 22-23 itself. Assume now 2 lakh was received in 23-24. What should I do? I should either apply it in 23-24 or I should apply in 24-25. However, guys, one change here. In which such income was received, you make received. So you read again. In the previous year 22-23, 8 lakh was not received and a declaration was submitted. See guys, I told you no, 1 second. Cool. Don't worry, I'm here. Again, I'll write, coolly listen, okay? Let's say income from property held in trust. Let's say 20 lakh. Voluntary contribution, let us say 2 lakh. Corpus donation, 5 lakh. Expenses of running the show, 4 lakh. Now tell me, corpus should I take into consideration? No. Now tell me, 20 plus 2 minus 4 I should do, or 20 plus 2, should I do that 15% etc. on 18 or should I do it on 22? That is the first point of discussion. 85% of what should be applied? Please check. %85 of income derived during that year. Did it say after expenses? No. Income derived during that year. So my dear friends, income derived is 22 or 18? 22. This anyway will come part of the application, expenses and all are allowed. So it was Commissioner of Income Tax versus Program for Community Organization. Supreme Court judgment which said should be on 22. Point number 1. This will not come. Now you tell me how to calculate 20 lakhs, 2 lakhs voluntary contribution, 22 lakhs. In that 15% is how much? 3,30,000. What is left? 18,70,000. In that you subtract 4 lakh, other expenses, 4 lakhs. What is left is 14,70,000. Now this 14,70,000 represents 85%. That's how you should look at it. This is the as per the Supreme Court judgment. Correct? These are expenditure on activities. To actually earn this income, I have expended these 4 lakhs, right? So 14 lakh 70,000 has to be applied. Now tell me, 14 lakh 70,000 has to be applied. There can be 3 scenarios. Scenario number 1, some part of it not received only. Second one, delay in applying. Year is over already. Third one also can be any reason, doesn't matter. So guys, this is option number 1. One more is option number 2. Option number 2 is 11 subsection 2. In option number 1, 2 things are there. If some part of it is not received, that is what I was doing. It is this subclause 1. See? This one. Subclause 1. Subclause 1 of explanation 2. Sorry, subclause 1 of clause 2 of explanation 1 to section 11.1. Read with 11b. What does it say? You will give him a declaration saying that whenever you receive it, either that year or next financial year, I will apply. You will tell that. You will apply. You will actually spend it. If you give a declaration, it will be considered as income of which year? In the year in which it is derived. Considered as income in the year in which it is derived. And if it is not spent, then it will be deemed to be the income of the previous year immediately succeeding the previous year in which the income was received. If not spent, immediately next previous year in which it was received, it will be the income. You will add it to the income. Now you see the example, you will understand coolly. In the previous year 22-23, 2 lakh was not received and a declaration was submitted that such income will be applied for the purpose when it was received or in the next year. Same in this particular example. 14 lakh 70 is not received. So I will promise that, sir, whenever I receive it, either that year or next year I will apply. Let us say I received it in 2022. Which means I should either spend it in 2022 or I should spend it in 2023. Now, if I don't spend it, when will it become an income? It will be income from the next year in which it is received. In my example, when it is received? 2022. So, when will it become income? 31st March 2023. Simple. So, here you see. 2 lakh was received in 23-24. Was it applied that year? No. Was it applied next year? No. Is not applied means 2 lakhs shall be considered as income in the previous year 24-25 next year. That's why next year in which the income was received. Got it? Second part of the story where there was a delay in applying only. I could not apply on time. Again subclause 2. Before the due date. Declaration when? Before due date of filing the return. I should again give a declaration. Here what does it say? Declaration that I have already received this year, mind you. 14 lakh 70 I have already received, but I did not have the time to apply. Such income shall be applied to such purpose in the immediately following year. And the income shall be deemed to be applied during the previous year in which the income is derived. So here I will say I've already received this year 14 lakh 70 I've received, but I could not apply. So I will promise to apply next year. If I don't, so obviously it will be considered as income this year. No problem. It will be considered in the year it is received, right? So this 14 lakh 70, I will take it as 14 lakh 70 deemed to be applied already because you have promised to apply it next year. Now if next year you don't apply, what will I do? Next year, obviously, I will deem it to be what? Income. So you see here. If such sum was not applied as per the declaration, then the amount not so applied shall be deemed to be the income of the immediately succeeding previous year. In which income was derived. When was it derived? Previous year. The next year. See the example. The trust received 4 lakhs in previous year but could not apply. The trust can furnish a declaration. The immediately preceding, shall be applied for the purpose in the next year, 23-24. In this case, 4 lakhs shall be deemed to be applied in 22-23 itself. If the income is not actually applied as per declaration, 4 lakhs shall be considered as income for 23-24. What is 23-24? Income of the immediately succeeding the previous year in which it was derived. When was it derived? 22-23. What is the immediately succeeding previous year? 23-24. Easy, come on. Now this is useless section. Why? Under 11.2. This is a useless section. Why? Why is it useless? Come on. I already told you. Why is it useless? Why is it useless? Because under 11.2, I can say that I am setting aside for a particular purpose. I am accumulating the money or setting aside the money. Here I can set aside for 5 years. I should invest it as per 11.5. All those securities I have to invest and keep it there. Then I should file a declaration. In a special case, I'll get 1 year addition also. 5 years will become 6 years. These are the options. This, my dear friends, is note number 8. Hope now you got it. Very, very simple. Note number 8. I've tried to make it as simple as possible with examples like this so that you don't have any tension while studying. Note number 7B still pending. Note number 9 pending. Let's come to note number 10. 9 will do. Yes, note number 9 later, guys. Note number 10, important. Note 10. So guys, the trust income now is always under IFOS, not under PGBP. So obviously if it's IFOS, not PGBP, accounting also is not as per Income Tax Act, but it is normal accounting, whatever you do, can be cash also. So what people used to do, conversion of black money into white money, they used to start donating in cash, expenses in cash, etc. When the assessing officer said, sir, you are expending cash every day more than 15,000 or transaction wise you are doing like 3 lakh, 4 lakh in cash, what is this nonsense? I will apply 40A3. Then where TDS is required to be deducted, you are not deducting TDS only. Correct? 40A1A if you remember. What is this? So the trust used to say No, sir, 40A3 is PGBP. I am not even considering about PGBP. 40A1 is also PGBP. I am under an IFOS. So, in his last budget, 2018, Arun Jaitley, G, inserted explanation 3 to 11.1. Finance Act 2018. For the purpose of determining the amount of application under Clause A or Clause B, provisions of 40A1A and 40A3 and 3A shall mutatis mutandis apply deadly. Derived from PGVP, put here. What is 40A3? Cash more than 10,000. What is 40A1A? TDS for residents. Not deducted means 30% disallowed. What is 40A3A? This is the entry where you do expense to expense payable. Then expense payable to cash. Then you cannot disallow because I am paying expense payable to cash. Expenses is not disallowed. This also is disallowed if you remember. 40A3A. All the three things are given here. Sir, what if I give trust, pay some amount to non-resident and TDS is not deducted? Unfortunately, this is allowed. Because if you see here, 40A1 is not covered. Please see 40A1A, 40A1A, then 40A3 and 40A3A covered, 40A1 not covered. So MCQ question this can be. The trust made a payment of an expenditure to a non-resident without deducting TDS. Will it be considered as application? Yes. A trust paid money to a resident without deducting TDS. Is it considered as application? No. Then one more interesting thing. Trust buys an asset in cash. We had seen in PGBP, asset is a capital expenditure. So you cannot apply 40A3. This was a revenue expenditure. But we had seen 43.1. It will not be included in the actual cost. It will be subtracted if you remember. Sir, PGBP, when we did, sir? Hey. Correct? Now tell me, can a trust buy a capital asset by paying cash and still claim it as an application of income? Possible, because 43.1 is also not covered here. 43.1 is also not covered here. Where is 43.1? Not there. 43.1 is also not there. So basically when I am applying income, towards expense on which TDS is deductible. TDS first of all has to be deductible, guys. Then 40A1A will come resident, 30% disallowance. But guys, you may also remember one thing. In the proviso to this 40A1A, there was one dialogue. If you don't deduct TDS, SSC will be called as SSC in default under 201. However, he will not be called as SSC in default if the other person to whom you have paid, he has included in his income, he has deducted tax, he has filed the return of income on time. I told you that example. I gave it to auditor. I forgot to deduct TDS. If the auditor has deducted a tax on his own, he has paid tax, he has filed his return on time and shown that he has paid tax, then he is not called as an SSC in default. So, for example, if TDS is deducted or paid in the subsequent year, then 30% will be allowed in that. So basically, what are the exceptions to the 40A1A? One is, if TDS is deducted in the subsequent year properly, then 40A1A will not come. Or one more is what? If the person to whom I have given the money without deducting TDS, if he has taken it in his income, he has paid tax, he has filed the return of income on time, then 40A1A will not apply. So these exceptions also will apply to a trust. So in simple rules, trust makes a payment to a resident expense and TDS has not been deducted. Will disallowance come? Yes, 30% will be disallowed. So will 30% be treated as application of income? No. Generally, if I pay 5 lakhs, 50K I had to deduct TDS, I did not deduct. So to the extent of how much is the disallowance? 30%. 1.5 lakh will be disallowed. 3.5 lakh will be treated as application, 1.5 will be disallowed. Now, on the other hand, subsequent year, if I have actually deducted tax properly now, if I do it properly, if there is a payable entry next turn, I am paying it, I am deducting tax, then no problem, 30% is pardoned. One more is what? I have paid full 5 lakh without deducting tax. The person who has received that money has taken it in his income, paid tax on it, filed the return on time, then also 40A1A will not come. We had seen it that time, I am just revising. So trust also it will not apply. On the other hand, even if I do not file a return, even if I make a payment to non-resident without deducting TDS, a trust makes payment to a non-resident without deducting TDS, still it is valid as per that in the trust's eyes, because it is full amount is taken as application, because 40A1 is not covered. All MCQ they'll ask. Got it? Simple. Then as far as expenditure is concerned, if any payment is more than 10,000, if it is revenue expenditure, then 40A3, it is not deemed to be application of income. If it is a capital expenditure, since 43(1) is not covered in explanation 3, it is treated as application. But this note also has to be written in the exam. The entire thing, ICAI how to write. If they give revenue expenditure, blindly write 40A3, not application. If it's capital expenditure, say 43(1) not covered in explanation 3. Hence treated as application. However, you can also take a view. In the exam you can write. However, a view can also be taken as, since it is purchased in cash, purchase price of the asset will not be treated as application. Even though 43(1) is not covered, it's not treated as application. This you can write as a note in the exam. Completely valid. Completely valid. Check out. For purpose of determining, same thing. Application only when there is requirement to deduct TDS. Yes. So basically, guys, if where TDS only is not applicable, then will 40A1A come? No. For donations given to other trusts registered under 12AA, there is no requirement to deduct TDS. Hence, 40A1A has no application only, obviously. So if the trust pays 1 lakh to a contractor and does not deduct TDS, but the contractor is included in income and paid tax, 40A1 shall not apply. If the trust pays 1 lakh to a contractor in previous year 22-23 and does not deduct TDS, and then 30,000 shall be disallowed in 22-23, will not be treated as application. But the trust deducts and pays TDS on 1/1/2024 next year, and 30,000 shall be treated as application of income in 23-24 next year. That's what I told you. 40A3 revenue expenditure. But capital expenditure, Actual cost. Thus, for determination of application of income, 43(1) does not apply. Hence, it can be inferred that for revenue expenditure, section 48(3) shall apply. Capital expenditure, it will be treated as application of income. But, as I told you, we can write this note. Write a note as discussed. 48(3)(a). If an expenditure has been allowed on accrual basis and in subsequent year if payment has been made in cash, then also such amount shall be treated as income of that subsequent year. Trust has incurred an expense of 1 lakh in previous year 22-21, which has paid in 21-22 in cash. In 2021, I have treated it as 1 lakh as application of income. But since payment in the subsequent year was made in cash for an amount exceeding 10,000, entire 1 lakh should be treated as income in 21-22. But this example now is irrelevant because of this amendment. See here. Here. Incurrence of a liability for expenditure would not amount to application. Amendment by Finance Act 20. So if you see, even shall not be considered as applied on payment basis. It should be, just because you are following any method of accounting doesn't matter. You should what? Actually pay. So that 48(3)(a) has limited relevance. That's why I just stuck to 48(3) and 40(a)(1)(a). Fair enough. Now this one. This was to appease many people in the Ram Janmabhoomi case. Finance Act 22. If the property held under a trust includes any temple, mosque, gurudwara, church or any other place of worship notified under 80G2B, 80G donations, the trust receives a voluntary contribution for the purpose of renovation or repair of such temple, mosque, gurudwara, church or other notified place. The trust at its option can treat such contribution as part of the corpus. They are renovating the temple and building a new temple, but they are renovating the Ram Janmabhoomi there, Ayodhya. So any money that you give there actually will be option, corpus, not even included. Imagine. Such contribution shall be applied only for renovation and repair. Such contribution cannot be given as a donation to any other person. Corpus is maintained separately and identifiable. But as I told you, you should always invest in 11 subsection 5. Explanation 3A to 11.1 was added. So you see here coolly. Voluntary contribution for the renovation and repair of temples, mosques, gurudwaras, churches, etc. Donations for the renovation and repair of temples, mosques, gurudwara, etc. are received for specific purposes. It is not clear whether they are corpus or they are required to be or they can be accumulated for a maximum period of 5 years. This maximum period of 5 years is 11.2. Corpus donations are never part of 11. I already told you. Now to provide clarity, 3A has been inserted, but this is actually for Ram Janmabhoomi. That they will not tell, right? Observation. Ram Janmabhoomi, their temple was already there. Now they are just innovating it. And they are telling that I am building a temple. Right, guys. Next, come to this 11.2. I told you, there's one more method. You've been understanding that. What is the one more method? 11.2. Let's understand 11.2. You see, where 85% of the income of the trust is not applied to charitable or religious purposes in India during the previous year, but it's accumulated or set apart, either in part or whole, for a specific purpose. It shall not form of the total income if these conditions are important. Condition number 1. Statement is furnished to the assessing officer in the prescribed form and manner. stating the purpose for which the income should be accumulated. Already written it here if you remember. Purpose, accumulated, 5 years, invest as per 11.5, file declaration, same. Statement should specify the period of accumulation. Maximum is 5 years. It can be 1 year, 2 years, 3 years, maximum 5 years. Money so set apart should be invested properly in 11.5. Statement should be before the due date. Same stuff. If all the above conditions are satisfied, amount accumulated or set apart shall be treated as deemed to be applied in the current previous year. Exemption under 11.2 shall not be available if statement is filed after the due date or the return of income only is not filed. One is you should file the statement before the due date. Okay. Second one, you have not filed the return of income only. In both the cases, exemption will be withdrawn. And of course, the maximum period of 5 years for which income was being set apart or accumulated shall not include the period for which income could not be applied due to order of the court. I wanted to apply, I wanted to apply the income, but then injunction court order came. Where the court order said 3 months don't apply. So in that 5 years, will 3 months be included? No, it will not be included. Very, very simple. 11.2. Now one more. Exemption is withdrawn if the specific conditions are not satisfied. What are they? First, it is applied for a purpose other than the purpose for which it is accumulated, then deemed to be the income of the previous year in which it is so applied. I told I'll open a school. I put it in some other religious activity. Gone. That year only deemed to be income. Ceases to remain invested in the modes. 11.5. In all these you should invest. If you have not invested, gone. Not utilized for the purpose for which it is accumulated. So this is other than the purpose. This one 5 years over, not accumulate, not spent. This is, it's not that it is given to somebody else, but it is not spent only for 3 years, whatever I have kept. What used to happen? No, I used to keep it for, I used to tell that I need it for a school. I will build a school, I had told, in 5 years. At the end of the 5th year, rather than building a school, I transferred this to what? Rather than building a school, what did I do? Transferred it to one more trust, which was running a school. This trust was registered under 12AA or 1023C. Then I told you I have applied. The government said the exemption is granted for you to open a school, not to donate to some other thing and then call it as application, not allowed. So specifically for section 11.2 only, they said this is not deemed to be application. This is not deemed to be application. See here. Is donated to any trust registered under 12A, 12B or any institution in 1023C, it shall be deemed to be the income of the previous year and it is so donated. 15% is set apart is not subject to any such condition. They can do whatever you want with that 15%. Correct? And if any amount is donated to any trust registered under 12AA out of the 15%, then it is not in violation. It can be, I already told you, it is just an ad hoc reduction. You can do whatever you want with it, no problem. %15 can be donated. DIT exemption versus Bagri Foundation. That's the name of the case. Just for your knowledge. Just for your knowledge. Property held under trust. Property held under trust will also include all business undertakings. Tirupati Balaji Temple, Laddu, where they'll buy, sell, that is business. Isha Foundation, Isha Balm, business. Sacred thread, business. Rudraksh, selling, business. Honey, business. Yes. Income from business shall be treated as income derived from property held under trust and shall be eligible for exemption 11.1 and 11.2. That's a gross receipt. Provided that the business is incidental to the objectives of the trust and you should maintain separate books of accounts. Baba Ramdev will do yoga like this. He will put his left leg behind his head, right leg behind his head. Then suddenly he will bring noodles. He will bring toothpaste. He will bring chocolate bar. Yes, incidental to business, incidental to the trust, incidental to the objectives of yoga. Yes, 100%. If the AO determines that the income of such undertaking is in excess of the income shown in the books of accounts, so you have shown only some 10 crore, but actually you are earning 50 crore, then the excess shall be deemed to be applied to the purposes other than charitable purposes, and exemption is not allowed, and it will be concealed income. That's obvious. It will be concealed income. No exemption will be granted. Modes of investment. So guys, entire income, entire funds of the trust, that is at 85%, must be invested, including the corpus. If it is not invested, then no exemption. You can just go through this, guys. Government saving certificate, post office, schedule bank, units of UTI, CGST securities. Can you do it for, can you invest in the shares of some company? Yes. Debentures issued by any company or corporation. See this also. Shares or deposits of a public sector company. Public sector company. Can I invest in Bharat Petroleum, Steel Authority of India? Yes. Bonds of approved financial institution, approved public companies, immovable property also I can do, excluding plant and machinery, deposits with IDBI. Just go through this, that's all. In that, this one is important, that's all. Here. Plant and machinery installed in a building for convenient occupation, that is, an exception. Otherwise, you cannot invest in plant and machinery. Convenient occupation. So if you are producing laddus in Tirupati, you can have a plant and machinery to mechanize the entire thing, that is allowed. Otherwise, not. Even you'll tonsure your head and give the hair, right? That hair will be processed properly and wigs are made. So you can install plant and machinery, no problem. But normal plant and machinery all you cannot install. Where investment or deposit in public sector company has been made and it ceases to be a public sector company. For example, you have invested in Air India. Suddenly Air India is taken over by Tata. Such investment shall be deemed to be investment for a period of 3 years from the date on such cessation, or 3 years from the date on which investment becomes repayable by such company. So the moment the year Air India is taken over by Tata, let's say 2022, 3 more years you can still keep. Before that you should withdraw. Or let's say they have to pay you sometime. 2023 they have to pay you. 3 years you can, 3 years from the date of cessation or the date on which investment becomes repayable by such company. They will have to repay you anyway. From that date it is gone. Very, very simple. Apart from that, other prescribed modes of appointment, units of mutual fund under 1023C, shares of National Skill Development Corporation, acquisition of shares by a depository, NSDL ka shares, NSDL and CDSL shares, gold sovereign bonds you can buy, debt instrument. Guys, just go through. This is not important. Just go through. That's it. Okay. Let's not waste time on all these things. And I already told you depreciation will not be allowed. Depreciation will not be allowed. As simple as that. Depreciation, if you buy a car, depreciation will not be allowed under 11.6. We have already seen in a note. Now you see. I had bought an asset under section 11. When I was buying an asset, is it application? Yes. Second, I sold the asset for 100 lakh. Cost of acquisition was 30 lakh. Bought it at 30 lakh. I'm selling it at 100 lakh. Now, what happens to this 70 lakh? Is this 70 lakh also income? Income. Is this income from property held under trust? Went to Supreme Court. Supreme Court said, no, this is not income. This is not income from property held under trust because it is not held. This is income from property which has been transferred. Problem happened. It was outside the purview. Capital gains was not discussed. That is why 11.1a was inserted. Hope you understood. 11.1a was inserted. What does 11.1a say? Where a capital asset being the property held under trust wholly for charitable or religious is transferred, capital gains arising from the transfer shall be deemed to have been applied to charitable and religious purposes. So this capital gain of 70 is deemed to have been applied to the extent below. Check it out. Capital gains, full capital gain is exempt when the whole net consideration is utilized in acquiring a new asset. I'll give you an example. Capital gains is exempt to the extent of what? Cost of the new asset minus cost of the old asset. And only part of the net consideration is utilized for acquiring the new asset. I'll give you an example, you'll understand this. Cost of new asset cannot be taken as application of income. However, cost of the new asset, if it is more than the sale price of the transferred asset, an excess can be treated as application of income. For everything, I will give you example, don't worry. See here. Check this, guys. Trust holds a capital asset which was utilized for charitable purpose and was sold on 1.3 as follows. Sale proceeds 10 lakh 80, cost of acquisition 7 lakh. See, when I had bought this, no, this would have been treated as application of income. Now this capital gain, now you see 3 lakh 80,000. Full capital gain is exempt when the whole net consideration is utilized in acquiring a new asset. What is the net consideration? 10 lakh 80 only, because there is no expenses. Now, if the net consideration 10 lakh 80 is utilized for what? Buying a new asset. See, cost of new capital asset is 10 lakh 80. Full if I use it, and cost of the old asset which was transferred was anyway 7 lakh. Amount exempt is 3 lakh 80. The full capital gain will be exempt. If I sell it at 10 lakh, 3 lakh will be exempt. 8 lakh, 1 lakh will be exempt. If I sell it at 7 lakh, nothing. If I sell it at lesser cost, obviously nothing will be exempt. Simple. But now you see. Cost of new asset minus cost of old asset. Yes. When only part of the net consideration is used. We have seen all that. Now what if cost of the new asset is more than the sale price of the transferred asset? Sale price of transferred asset is 10 lakh 80. What if the cost is 14 lakhs? Last part. 14 lakhs. So it can be divided into two parts. One is to the extent of net consideration. That is 10.8 lakh minus 7 lakh. 3 lakh 80,000 is exempt. Obviously, but the excess, guys, that is 10 lakh 14 lakh minus 10.8 lakh. 3 lakh 20,000 is treated as application of income. This is treated as application of income. Obviously, I have applied, no? I bought more. Apart from 10 lakh 80, I have still spent 3 lakh 20 more. That 3 lakh 20,000 is what? Application of income. Very, very simple, my dear friends. So this completes the first class of charitable trust. Very, very important. Please go through again. In the next class, we will continue. Very important chapter. We have finished around like 6 pages, 6, 7 pages. Still 10 more pages to go. Very, very interesting. Very, very important. Right, 2, 3 classes we'll do. Yes, 8 to 12 marks in your pocket. Okay. See you guys. Take care.